Mr. Prasad, always an honor having you. Next up, we're talking about someone who retired as a general manager for the Dena Bank after completing 38 years of service. As a general manager, credit, he was in charge in the credit portfolio of the whole bank, heading committees, important committees like the Exposure Committee, Credit Committee, and also instrumental in opening separate department for the SME financing headed by the Deputy General Manager, and established 78 specialized branches for financing only SMEs. Could we now have the pleasure of inviting the Chairman, Bharat Bank, U. Shivaji Pujari. Wow, so 26 plus years, we're talking about 38 plus years. This is only getting bigger and better. We've got so much experience already on the panel. So cumulative, I guess it's going to be over 100 years, yeah? Next up, we're talking about a veteran with cross-industry experience and being on the board of directors since 2008, 2009 of SVC Bank, has had many shining moments under his able leadership, has contributed extensively in various areas, and is also an independent director in listed pharmaceutical company and is a trustee in certain social organizations. We're talking about the vice chairman, SVC Cooperative Bank, Uday Kumar P. Gurkar. Thank you so much, Mr. Uday Kumar, for joining us. And lastly, but not the least, we've got somebody who's been on the Nanded Board of Directors member for over 20 years, is a recipient of multiple awards. And of course, we've had the honor of interacting with him. We're talking about the Vice Chairman, Nanded Merchant Bank, Lakshman Sangevar, who will be joining us. So, I must say, Yogesh, definitely over 100 years of experience cumulatively. I believe it will be 150 years of experience coming in on this panel. And on that front, Yogesh, you've got that able task of curating the discussion forward. Over to you.
Good evening, everyone. Hope I'm audible to all. Thank you for joining us today at the CIO News event. It's very important that we have good audiences like you and have such kind of experience nearby. I can see as it was told that it's almost 100 years of experience sitting on left-hand side, and that's very good for me to just learn from such high-level people and understand how they have done as part of cooperative banking. So we are discussing cooperative banking 3.0. So just giving a context to it, cooperative banking 3.0 is where we have seen cooperative banking kind of giving those kind of grassroots level facility to the people who are unable to open accounts in the urban or kind of metro cities. They have helped them quite very specifically. Now coming to at a level of 3.0, where it's time for the cooperative banking to get into collaboration with the fintech companies or with the financial institutions to help the customers get more level of satisfaction, as well as providing them digital level of services which helps them kind of get more level of better understanding of the products that they are providing. So thank you everyone, this was just a context. Thank you everyone for joining it. So I'll start my first question with Pujari sir and Lakshman sir. This question, sir, comes to you. How do you see the cooperative banking that has evolved in last 5 years, and what do you foresee as compared to what is the difference in before, like 10 years or 15 years? What's the difference at today's age?
Well, cooperative banks, actually, if you see now, they are at the crossroads. Earlier, the cooperative banks were just like credit societies, small group of people coming together and forming a cooperative society. Then it turned out to be banks. These banks have no license. They were funding all the financial needs of the rural population. Rural population, there was nothing. They were not getting any funds at all from the nationalized banks. Even after nationalization of 1969, rural people, they were not getting any funds, and they had to beg or mortgage their properties or gold or anything from the money lenders. So after that, RBI came out with the suggestion that NABARD let them professionalize all the cooperative banks which are unlicensed. Even if you see in 2012, about 290 cooperative banks were unlicensed. Now it may be about 15 to 20. RBI mandated NABARD to make them professional, come under the platform of CBS, make completely system driven. So after that, Malagam committee came. Malagam committee said, cooperative banks are unprofessional. Let there be board of management. So in 2011, RBI mandated high-powered committee saying that, everybody should be, at least in the board of directors, 50% should be professionals. At least 2 expert directors should be there. That's all. Now, almost all cooperatives are under the CBS platform, and system-driven things are there now. And a lot of things have these things have undergone change, and they are competing with all the nationalized banks and the commercial banks. And this, in spite of all the problems, because they lack capital, they have no funds, infrastructure is not there. Still, they are competing with the well-known public sector banks as well as private sector banks. So this is the way last 5 years it has gone. And now coming to the present position, they are at the crossroads. RBI is saying there is no leeway given to the urban cooperative banks. They have to be like all the nationalized banks or the commercial banks. The circulars applies to these small banks, cooperative banks, and then commercial bank, the same circular. There is no leeway at all. So under these circumstances, they have to find out how the system can be developed. How? Because they have no capital, infrastructure facility is not there. Under these circumstances, they say, we have to go much bigger unless somebody comes to us, then some collaboration takes place here with the fintech companies, because fintechs can grow together. That is what they are thinking. Ultimately, yesterday only that digital lending circular came in the night by RBI, saying that you can go for parallel banking and there will be FLDG, that is first loss guarantee is given. Finance guarantee. That's a very good circular. So now it is ultimately, now they are saying digital lending has to be there, and all cooperative banks also have to participate in this.
Thank you, sir. Lakshman sir, what's your view on the today's generation who is kind of opening bank accounts, and the ones that you kind of, when you started the cooperative banking as part of Nanded Merchant Bank? So what is the difference that you are seeing, and how is it coming out for the bank?
Nanded Merchant Bank is a 60-year-old bank. Earlier, it was established under State Government Act, and RBI was nowhere in the picture. It is a self-funded bank working just like what we called as a patpedi. Later on, RBI imposes its act in 1967. Before 69, that is before the nationalization, these banks provide the basic funds to the rural areas. Now we are working with just 20 branches and 1,000 crore business in 60 years. Now RBI, after 2008, government and RBI imposes various norms, just like income tax, just like CD ratio, just like CRAR, and other restrictions too. Earlier, there wasn't a government SLR imposed on the cooperative bank. Now, after 97th constitutional amendment, central government in such a position, central government wants to demoralize these banks. Either they should convert into a financial bank, a small loan bank, or they should merge among themselves. That is why in last 4-5 years, you will find that more than 40% bank has been merged or vanished. At this rate, when a bank like ours, if wants to give better services to the customer, there are many hurdles. Technically, the persons, the technological persons, if you wants to hire, nobody wants to come at such a far distance. And simultaneously, the infrastructure, the investment in infrastructure is also a problem. When CBS was introduced, I would like to share an experience. We have installed our own data center with a clustering of computers with a low-cost version, which runs for 7 to 8 years. Now we are migrated to the cloud computing. But what about the cyber securities? The expert, the guidance of the expert and the persons to deploy are not available. And the infrastructural investment is not possible for such a small banks. So we request those multi-state banks or organizations of the cooperative bank, they should form an umbrella to provide such services to the small banks so they can survive. We have come across banking too, cooperative banking too, that CBS, KCYC, KYC, and other things too. But when the cooperative bank 3, we are having so many problems to come across, to cope up with the requirements of the RBI, central government, and state government. There are so many problems. And how many banks will survive in this position? I can't say no.
So,
Mr. Pujari will definitely, and Mr. Udas will definitely tell us, because they are having long experience, they are having so much good standing in this area.
So basically, it's the customer's requirement has kind of increased in today's day, where we kind of need a lot of services to be provided them as part of digital services, which will of course come, slowly, but it has to come, and that's the change that is much needed at today's day. I'll quickly go on to the next question to Pujari sir. How do you see the introduction of UPI in 2016? And we have the feature phone availability that UPI 123 Pay that RBI has launched along with the digital payments called as DG Sathi. And how do you think that cooperative banking 3.0 will kind of manage this solution that
If you
RBI is
see, UPI transactions are maybe about trillion. The world's number one country having UPI transaction more than 1 trillion in a day, that is India. We have not only done in India, now we are expanding to the Southeast Asian countries, plus Arabian countries also, Dubai, Bahrain and all. So that is once, UPI comes, this, I am telling you, this started, thanks to COVID and the demonetization, this cashless society has started. People don't want to go to the bank now. Taking a mobile in hand, younger generation, they go to see, I will tell you one example. When I went to a temple in a rural place, I wanted to purchase one coconut. I had no change. Sir, आपके पास नहीं है पैसा? Don't worry, I have got a QR code. 50 rupees, it is transferred. That is the level of penetration of UPI throughout India. Everybody knows. Go to a Bajiwala, there is UPI. Everywhere you go. Go to a medical shop, you don't have to take cash at all. That is the penetration of UPI now. And going forward, now even the wallets, credit cards, everything, the transactions are much less, but the UPI transactions are more. This has helped India to grow at multinational level. And the world is surprised how India is doing this UPI transaction. That is how, I am telling you, we are proud of this UPI, this thing. Even the RBI is saying their cashless society is very good. In the sense, you don't have to get, because there will not be any black money at all now.
Okay, okay. Thank you, sir, for the answer. And it kind of allows the cooperative banks to ensure that they are kind of collaborating with the fintech companies, because there are a lot of entities who are onboarding banks and allowing us the payments through the internet banking, and that allows them the ease of, even if I have an account with a cooperative bank, I don't feel restricted to kind of use the applications that the fintech companies.
Collaboration with fintech companies, that is a very good thing for the cooperative banks. Otherwise, they have no infrastructure at all. They lack capital. When the fintech companies comes, this is a win-win situation for both. In the sense, for technology's sake, fintech companies are there. For capital sake, this is our cooperative banks are there. They're traditionally, they are taking calculated risk, whereas fintech companies, they take more risk. In the sense, they're technology very high risk takers. Otherwise, you have to have established infrastructure for IT facility. It will be too much of money is involved. When you collaborate with the fintech companies, efficiency is there, agility is there, alacrity is there, and you can do, because you when you send loan proposal to a bank, they cannot wait for years together to sanction, months together. It has to be done within a day or two. Otherwise, people have no patience. Customers will say they're high. Customers, there are very, very high demanding customers. Customers, I don't want to wait in the queue and get my loan sanction. It has to be digital lending. You have to have technical collaboration with somebody and do it very fast. This alacrity or this agility, that gives the efficiency of a cooperative bank to compete with any of the big banks.
Got it. Got it. So, taking out your point with regards to the collaboration, we have Uday Gurkar sir, who from SVC was kind of collaborated already with lot of fintech companies as well as the technology companies, and he knows a lot of on what cooperative banking 3.0 has kind of been implemented as part of SVC. So, we'd like to hear from you about what digital platforms or initiatives that has been taken by your institution, or something that should be taken by the cooperative bank to reach to a particular level.
Yeah, thank you, Yogesh. Good evening to all of you here. You see, today basically the market is flooded with a lot of fintech companies. The challenge for all of us is that which one to select. There are basically certain aspects like, what is the cost involved, what is your requirement, whether you can go for X or Y fintech company, so that we can, take their help in digitizing our processes and things like that. But yes, unless these are evaluated and unless we have internally certain people to evaluate their performances, their earlier performance and their capabilities, it becomes difficult for the cooperative banks to go forward and take their help. This is the reality today. But yes, there are banks which are within the cooperative banking sector also. There are the banks which have a good capability. The problem comes, as I said, only for a smaller cooperative bank. That's why we have been discussing some point of time that yes, there has to be some support either by the NAFCUP or somebody to help them in computerizing, in help them in digitizing their processes. So as far as my bank is concerned, it is considered to be number 2 in the cooperative banking sector. We have around 33 to 35,000 crore business which we do. So we have been earlier using our own internally developed software. But later on, we found that as and when we see these fintechs and wherever we have to interface with other fintech or the software, we were finding it difficult. So we have now decided to change over from our existing, which is known as Genius software, to a Finacle, so that the first stage which we have completed, we will go very soon, go live in a month or so. So apart from that, but our internally software was also helping us in, providing the customers in terms of internet banking, in terms of, mobile banking. So these are all taken from the, some of the fintech companies only. So internally also, we have also developed certain softwares for to give some kind of a service to some of the customers, particularly if we talk about, we have a certain fee collection software, which we have been giving it to these schools and colleges. Likewise, for cooperative societies, we have our own software, which helps in cooperative societies in maintaining and collecting their software. This is how step by step we have been going forward. And making our digitization process more and more useful, and also it helps the customers also to take advantage of this. This is the stage. Yes, going forward, there are, when we talk about, we have been hearing about AI, and these are far, far from our reach at this particular point. I will put it like this. So yes, as and when we have the capabilities, we will definitely go for those areas and see to it that the customer satisfaction is more important for us. So going forward, we may try to do these aspects of it. That's what I can say in this respect.
Thank you, sir. Got your understanding. Same, we have Prasad, sir. As per your expertise, any kind of specific technologies or digital platforms or softwares that you have kind of seen that the cooperative banks can use to kind of achieve this kind of level as we are doing at the scheduled commercial banks or the nationalized banks, and how we can provide a better customer satisfaction at the end of the day.
Yes, basically the thing is that now cooperative banks, there is a question of existence, and if they want to compete in this competitive market with the scheduled commercial banks and nationalized banks, then it is very much necessary to have some kind of systems which are there in the scheduled commercial banks, just like use of analytics and AI things. Then I think that is a must needed technology for the urban cooperative banks right now, because to find a customer, genuine customer who is in need of your banking services, that is something you have to go to the customer now. Earlier, the situation was that the customers used to go to the banks. Now the situation has reversed, and the banks are going to the customers and requesting them to avail their services. So specifically, this AI kind of things can be used by this urban cooperative banking sector to do the marketing and to target the customers which are in need of their services. That's how they can definitely grow. And at our bank, Vishwas Cooperative Bank, we have already initialized this AI thing, and it is in early stages right now. But since last 1 year, we are working on it, and we are getting the results for this. Even when the urban cooperative banks in our district, they were finding to do the lending of around say 25 to 30 crores, we have been able to do a lending of around 120 crores in a year. So that's how we are basically targeting and using this AI technologies.
So, Uday Gurkar sir, which one of the questions that we wanted to understand as well was the initiative part, the SVC Bank kind of leading the cooperative sector as of now. So, so what level of technologies that have been implemented across the services, maybe providing bill payment services, providing digital banking platform, providing other services which helps them to kind of get the requirements maybe in the form of a financial transfer or maybe non-financial transfer. So if you can throw some light on that from the SVC person.
Yeah, as I said earlier also, that to help the customers, we have, things like now today's, there are a lot of public issues which are taking place. We provide them the service of ASBA. And as I said, in terms of uh, opening of FD, there are, like some of the banks have already started, but we have also started our send SMSs through which you can open your FDs. There are certain additional, facilities which we are giving to the customers. And for corporate customers, we have also got, we have tied up with one of the fintech company to provide them bill discounting facility. Like that, I think the steps taken are a little slow and progressive. That's what I can say on this.
So, Prasad sir, with regards to the key advancement and innovations, as you mentioned on the AI part, if you can provide more, information on what exact, collaborations that we are planning to do, or you had already kind of done with most of the, maybe with other banks or other fintech companies or other technology companies as well from that angle.
Basically, I think to have a collaboration with fintech companies, that is what is most important, because you cannot just say that I'll do everything on my own, and that is the biggest challenge for this urban cooperative sector today, to have a right kind of resource for each and every services or scheme which they want to launch or which they want to provide. So basically, technological collaboration is very much important. And in that perspective, what we have done is we have identified two of the major technological partners, and we are continuously in touch with them. We are having conversations, brainstorming sessions with them, and we are just trying to see how our bank can uh, have some kind of innovative service for the customers. And it is not that we are just thinking for our bank. Once it is successfully implemented at our bank, we also wish to share it with all the other banks from our district, so that entire sector should grow. It is not that just one bank can make a difference to the economy or to the sector. It is that all the banks should be on one platform. So that is how we are planning.
So that's a very good point made by Prasad sir on collaboration with fintechs is one of the important part, but collaboration with other cooperative banks within the sector is also an important task that is being done and can be planned accordingly. I'll have one question which is very important. How do you see this question, Pujari sir? You can start with. We'll just take a minute, everyone, on this question, and we'll kind of complete. One is with regards to the regulator and the policy makers. So how do you see them, kind of supporting the cooperative banks, allowing them to, implement infrastructure, which is, I guess, lacking nowadays. And that is something where we are intending to do collaboration for. And any specific challenges that you feel that, that can be, resolved by the policymakers or by the there are apex cooperative bodies within the cooperative banking sector. So how both of them can together kind of make a change within the sector?
Right. In the sense, RBI circulars are now applicable to urban cooperative banks and almost all the cooperative banks. All of a sudden, they change certain parameters, which will be actually shocking to the cooperative banks. Right. One, in the sense, some of the ARCs, which some of the asset sale to the ARC companies, all of a sudden they sent a circular saying that you provide retrospectively. That much provision is not there with the cooperative banks. This is the challenge. RBI says, when you represent NAFCAP or any of the umbrella organizations represent, then nothing comes from RBI. In this, you have to live with it. You say, you book loss, nothing happens. Previous retrospectively, you provide it, but it has got to be done. This is the way. These are the challenges where cooperative banks are facing. The big banks, there is nothing. They have got ample provisions available. Small banks will have no. Ultimately, what RBI is saying is small banks, either do or die situation. In the sense, all of a sudden you give all commercial banks circular to the urban banks also, cooperative banks also. So this is one challenge. Anything, when they come for inspection of IT inspection, they don't, you say your compliance is not over. Our compliance is, if you say 80% compliance is done, they say no, it is only 20-25%. So whatever you have done, it has gone waste. Either you appointed Deloitte or some of the software organizations, some collaborate with fintech companies and do it. Otherwise, it is not proper. If you have got any application of your own, and there is a financial application, your own application they don't see at all. They doubt. After the PMC fiasco, they don't believe the cooperative banks at all. RBI is so strict now. They come here, they see each transaction. They don't know, even the emails, whatever you have sent, they see, they doubt whether it is correct or not. In the sense, manual intervention is completely prohibited. Everything has to be
Technological,
system
yes,
driven.
system, yeah.
So this is a challenge cooperative banks are facing with the RBI. But now that challenge is almost over. They are rising up to the occasion now, cooperative banks. They are nothing, no, you cannot say, they are inferior to any commercial bank now.
Got it. Lakshman sir, one quick answer if you have with regard to the policymakers or any challenges that you feel as part of your organization or as seeing the cooperative bank sector.
Once again, I will like to share an experience. When the state government was regulating these cooperative or urban cooperative banks, we have compulsorily keep our deposits, reserve funds, and current account with the district cooperative bank. In our district, the district cooperative, RBI has imposed section 35 on district bank. So our all reserve funds and current account funds were seized, including the FDs. No interest was paid for 7 years. In that case, RBI was compelling us to make provision 10% as if the assets are bad debt. And income tax was compelling us to pay income tax on the interest earned, which was parked. So we fight for 7 years. We have not complied with IT. We have stick up with RBI's circular. What is the income? In RBI's circular, there is a definition of income. We stick up with that circular and fought with IT department for 7 years. Later on, when the interest is realized, we have deposited the income tax. But till that time, when our bank was to survive, RBI was compelling us to make 10% provisions. And income tax was compelling us to pay tax on the income, which was not as an income. If this type of situations are raised, and we talk with so many big banks, what to do with our organization, with our federation, but no one was supported us.
So basically, we do see there are a lot of challenges that are there with the cooperative banks, and we as a whole sector, we are also forming part of the financial services. So we try to support the collaboration. There are mediums where we can bring on the teams to have that collaboration with the banking sectors as well as the cooperative banks and as well as the fintech. So that is one of the important section which RBI is already going into that direction, and we see a lot of efforts being put. That's what our understanding has been, and of course it's not always at a closure end. It will always remain in a way that it has to improve, and of course we will do that. Last one question I'll take with Uday Gurkar sir and Prasad sir. How do you envision, from the going forward, say next 2-3 years, with regards to cooperative banking and the customers that are coming over here, and how do you feel that this is the customer has to go and say I'll be putting my money or taking the services from the cooperative banks, and how best we are able to achieve that as an overall cooperative banking sector as well, and as well as from the organization as well.
I think today the situation is that if you ask me the the age profile of the people, because if I see 10, 15 years back, there were more who are in the age group of 45 plus. Today, if we have to invite the younger generation to, come to the cooperative banking sector to transact with us, we have to provide them the best of the services which other private sector banks and public sector banks are giving. So that's the way how we can, invite the people to become our customers and also in terms of our borrowers. So we have also taken a lot of initiatives from that particular point of view, where the younger generation is given all kinds of facilities as much as possible within our reach,
Correct.
and so that today, if I look at my age profile of the people, I find there are more of people who are in the age group of 25 to 45 rather than 45 plus. So that's a kind of a change if we have to make. We have to give those kind of uh, facilities to the customers to make use of it. That's the way how we can increase our business and also give kind of a customer service.
Yeah, Prasad sir, your view on that?
Basically now, as today we have got around 447 banks which are there on UPI, which are live on UPI. And in the month of May itself, if you find it, there were some transaction amounting to rupees 14 lakhs 89 thousand crores, which took place in the month of May. So digitizing is now compulsion for every bank. But then while going towards this digitalization, how to secure your bank and how to secure your money, that is becoming a more and more challenging. And the infrastructure which is required for cyber security or securing your bank, I think cooperative banks face a greater challenge in there. And the greatest challenge for the urban cooperative banks are finding the right IT persons or resources to manage their banking system. Because now I think a time has come where RBI should take initiative that there should be two CEOs in the bank, one CEO for the banking and another we can say CTO, so who is for technology. Because now if a candidate has done his MBBS and if you will ask him any question from engineering, he won't be able to answer it. So that is the situation currently, that RBI puts every responsibility on the CEO, and there are so many banks where CEO doesn't know anything about the technology. So in this thing, I think the Reserve Bank should interfere in between, and they should come up saying that okay, the CTO should be someone different from CEO, and he would be responsible for all the technological things, or whether it is good or bad, and the CEO would be only responsible for the banking transactions. So down the line, another say 3 to 4 years, yes, there would be banks, or there would be some changes in the banking scenario, wherein we all will need to think on these lines, or spend more money on the technology rather than the manpower.
Got it. So, as we started the session and we understood how cooperative banking 2.0 was and how we are moving to 3.0, there are two, three things which are very important. One is collaboration with the technology companies as well as fintechs. The second part is how do we manage and secure, as Prasad sir said, about the cyber security, even we had multiple sessions a few minutes back, as well as how customer needs to ensure, or we need to ensure that the customer gets the services as part of customer hyper personalization session we had a few minutes back, where what is the kind of personalization we are giving as part of experience. So that is where we are heading towards. Of course, we will have regulatory requirements that we need to meet, and that's as a good example was given in today's presentation, that you have a football ground, and again you need a referee to kind of manage to the entire game. We cannot be left with the players. So that regulator fencing, as well as along with doing the technological advancements, is something which is very more important, and which we have seen the cooperative banks are doing it. And I would like to give a good applause to these people, because they have kind of provided so much services to the grassroots level people, bringing them up, and now they are able to kind of able to see those kind of things which they did not kind of expect themselves, using a smartphone, doing a banking, because they already did a level of banking already with the cooperative bankers. So that's kind of a summarization that I will have from the session. And thank you all the participants, the panelists. It's a great honor, 100 plus experience I can see on my left hand side, and still going strong, and contending of getting things done which are far ahead of like 5 years, 15 years. It's very excellent of them. Thank you, sir. Thank you. I'll have one point. Yes, sir.
Moral of the story is RBI wants strong cooperative banks. Small banks, they say either you become strong or you perish. This is the idea of RBI. In the sense, either you become a small finance bank or you become a universal bank. This is the idea of RBI. Thank you.
Yeah. So
Thank you, Yogesh.
yeah, thanks everyone. And I would like to thanks Khushbu for kind of having this kind of panel, there for us to give so much of information how this has been, because this sector is kind of very important from India grassroots level, as you said, from Bharat per se. And now we are on the stage and kind of providing the importance onto that. So thank you everyone.
Thank you so much.
Yeah, thank you.
Thank you so much, Yogesh, for curating this discussion. Of course, if I may have the honor of requesting Ms. Soni to kindly join us on the stage and help us with the felicitation. Of course, Yogesh, we'd like you to contribute towards the felicitations as well. And some pleasantries being exchanged on the stage with the founder of CIO News, Khushbu. So we'd request Khushbu and Yogesh to help us in the felicitation of all our eminent speakers. First up, thank you so much, Mr. Prasad. Let's give him a warm round of applause. Thank you, Mr. Pujari, the chairman of Bharat Bank. And of course, Mr. Pujari has more than 38 plus years of experience, always contributing so well. Thank you, Mr. Uday Kumar. Thank you for joining us today. And thank you so much, Mr. Lakshman, for joining us. Vice Chairman, Nanded Merchant Bank. And of course, a big thank you to Yogesh. Thank you for your excellent curation of the content today. And we'd request Ms. Jain, along with all our eminent guests of honor, our panelists, to kindly come together. And it's time for us to get them in one group photograph and create this iconic moment. We're talking about the leaders of the cooperative banking industry. Let's give them all once again a big round of applause. A great session right there. And thank you so much to our entire leadership in that space for joining us today at our summit. Thank you once again. So, well, with that, it is time for us to move ahead to our next discussion. The discussion being on the future of fintech's post-funding winter. We couldn't be more excited. First up, to curate this excellent discussion forward, we've got somebody who's got a rich leadership experience in payments and banking in areas of regulatory compliance, risk, product management, with specialties in compliance, risk management, business strategy, and execution. We're talking about partner at Grant Thornton Bharat LLP, Rohan Lakhiyar. Let's give Rohan a warm round of applause as we welcome him towards the stage. And of course, thank you, Rohan, for helping us curate this forward. Next up, joining us is going to be a professional with over 15 plus years of experience at Credible, is leading the efforts in building industry-focused differentiating competencies by recognizing potential avenues of growth and ensuring revenue realization. He heads a team responsible for identifying and developing the opportunities for the platform business across India. MD, Chief Revenue Officer at Credible, Ashutosh Taparia, joining us. Thank you, Ashutosh. Next up is our professional with a vast experience of around 20 years in the fintech industry. After working for the global investment banks like JP Morgan, Lehman Brothers, and Citibank in North America, he was involved in developing a mutual fund startup in India called clearfunds.com, which later got acquired by MobiKwik. Currently, he's engaged as the innovation head for the NPCI Bharat Bill Pay and is busy in creating game-changing products for global payments, digital lending, and blockchain-based fintech. We're talking about innovation in charge NPCI Bharat Bill Pay, Rajan Tawate. Let's give Rajan a warm round of applause. Well, such great leadership joining us. It's now time for me to call upon a renowned CXO who has a deep understanding of the payment, retail banking, transaction banking, digital business, and was a part of the leadership teams of M2P, Fintech, Payment, and RBL. He's also a member of the Paytm Payments Bank founding team focused on converting cash to digital cash. He's been able to forge new, deepening existing relationships in the BFSI space. We're talking about the president of M2P Fintech, Abhishek Arun. Thank you so much, Abhishek, for joining us. Next up, we're talking about somebody who's responsible for spearheading growth, partnerships, products, and expansion into newer markets. Somebody who brings over 20 years of experience in digital banking, payments, trade forex, sales execution across wholesale banking, retail, and startups. Prior to cash-free payments, he was associated with Yes Bank. He also drove the first ever API integration across the industry, as well as strategic partnerships with various programs and organizations like SBI, Yes Bank, ICICI, and HDFC Bank in various capacities. We're talking about the Chief Business Officer of Cash-Free Payments, Arun Tikko. Thank you, Arun, for joining us. And on that front, Rohan, over to you.
Yep, thank you. Good evening, everyone. Whenever we see BFSI as a conference happening, fintech gets added nowadays, and it's an incredible feat for such a young sector to be added at each and every BFSI segment, conferences that we see. The topic for discussion today is really to figure out what fintech's, how fintech's journey has been and what the future is going to be. We had an initial discussion with Khushru earlier in the day where we talked a little bit about how fintechs have evolved and what the future is going to be. But with these panelists, we'll explore and deep dive in terms of how their experiences have been and what their views are on in terms of how the fintechs will evolve from here on. Fintechs, while in the country is still young, but they have made significant inroads, especially in the B2C segment. If you look at payments, they got a fillip during the demonetization time. Digital lending and payment together got a fillip again when the COVID pandemic hit. And especially in the B2C segment, I think the fintechs have done extremely well. Now, what are the segments and what are the key
niche areas that the fintechs will take on from here is something that we'll explore with each of these panelists. So my first question will be to Ashutosh, given that his company is into supply chain finance, and yesterday itself, RBI released a guideline on FLDG, which again encourages digital lending on the retail side. And we have seen that digital lending has come a long way in India in terms of the way they have been hyper-personalized for each of the users. And there's a term that I'm going to borrow with an ex-colleague of mine who used to call it as a sasayization. It's a term that FMCG industry uses, which means that break down the financial services into smaller bits, which can be consumed at an affordable price. And that is what digital lending has done, especially on the retail side. I just wanted to understand from Ashutosh that while ascertaining or undertaking KYC of an individual is fairly simpler, given that India has a digital ID available. Users are giving out data as we speak while we're sitting Internet of Things and social media, etc. So people can, fintechs can harness that data. But from a B2B side, that information on non-individual is not necessarily available. So are the fintechs who are operating in the B2B space, how are they solving for this problem? And are they really transforming the way lending happens in the B2B space in the current state?
Okay, thanks, Rohan. Good evening, everyone. And just probably to look at how B2B and B2C fintechs are different. KYC is one small aspect, but from an underwriting perspective, also there's a significant difference between B2B and B2C fintechs. Now, there is a lot of initiative which has been taken by the regulator also around KYC and digitization on the B2B space. Of course, we've done significant advancement with COVID, with DeMon on the B2C side, both in terms of KYC as well as underwriting. Digital underwriting and KYC is something which is fully possible now, and most of the leading financial institutions have pivoted towards digitization in their lending journey. Partners like Credible help the financial institutions achieve the goal. Now, what we really enable is capturing data through and enabling KYC through means of CKYC, VKYC, etc. Now, these are all possible for businesses as well. Underwriting is a larger and a much more complicated piece to solve for on the business side, on the B2B lending side. And there are various ways in which we enable underwriting as well on the B2B space. One way to do this is if underwriting is predicated with small businesses dealing with either procurement or receivable of large business, and we can capture data of this business association and predicate credit risk because they've been dealing with a large business on the other side, mid-size or the large business. Now, for us to enable that, we need to capture the data around the business association, which could come in from the large company, which would come in from the SME, which would come in from the GST data, and that can also be digitally pulled out. The alternate way to do this is if there is no association with a large company and SME is dealing with another SME, then how do we enable lending to that SME, right? Now, fundamentally, even that leg can be solved digitally in terms of underwriting, provided the SME has access to GST and we can cull out data from GST. There is initiatives by the regulator around account aggregator. So bank statements can be pulled out through account aggregator. If not, this bank statement data can also be uploaded through digital means, and the entire underwriting journey can be digitized. Now, as fintechs, what we are enabling is to large banks, we can give in this solution as a SaaS so that they can digitize their entire underwriting. Alternatively, fintechs who are also NBFC like Credible, we can curate specific portfolio of the lending book, which then large participants could participate through a capital market transaction through securitization. So we can bolster significant capital by digitizing in both KYC as well as underwriting and enable liquidity to SMEs.
Super. I think that's great, the way you guys are leveraging technology to solve for these problems, because typically non-individual has been a clunky problem to solve for. And with fintechs coming in, I think we'll see significant innovation in this area going forward. Let me come to Arun. Tikku, sorry. So we have seen payments in the B2C space as one of the oldest fintechs in the country. I mean, almost 12, 15 years. It all actually started with BillDesk, so maybe 20 years. And they have made significant inroads in the B2C space where payment has become almost ubiquitous. It has replaced cash in some section, and it is driving less cash economy. Cash free works on the B2B space. Have you seen similar success in the B2B space? What are the fintechs doing in the B2B space for solving for payments problems that entities face?
Yeah, thanks, Rohan, and thank you for having me here. I think if you see the journey of after UPI was launched by NPCI, and the B2B space actually picked up very fast because they were smaller payments, and the journey so far has been a great success. If you look at the number of UPI transactions which are happening, something around 1.2 billion transactions have happened last year, and prior to that it was something around 78 odd a million transactions happening in a year. So the growth has been there, and same thing has happened into the B2B space also. It is not of that level, but I think the adoption of companies using the fintechs, which is helping the customer to get the collections and payments in a faster way. The challenge at this particular moment is, I think, there's a trust factor which is there, that is actually what you call which is building up. I think what has happened during the pandemic and what has happened during the demon time, it actually aggravated the usage of. So when it was B2B earlier, everything was being written, whether it was an RTGS, the people used to do it through the branches and all that. Now the both sides, they want to use the digital platforms to use whether it is UPI, whether it is cards, whether it is debit cards or net banking. That is very prevalent these particular days, and I think this is going to go further. As a cash-free payment, we not only help the merchants do that collection through all these modes, we also help them by giving reconciliation solutions, invoicing solutions, and I think this has actually helped the customer to get the funds on a faster mode. Yeah, it is still a slow start, because I think there's a bigger market which is yet to be catered, yet to be come on to this particular stage, but it is gradually growing in the days to come.
Yeah, absolutely. I think, as I said, these are early days, and I'm sure as you guys evolve, it will scale up. So with that, let me come to Abhishek. Abhishek has been a career banker, a part of the largest fintech in the B2C space, and now he's part of M2P, which operates in B2B. So Abhishek, in your opinion, which segment or where does the real opportunity lies? Is it the B2C or the B2B, or you think which one is the more challenging one to solve for fintechs?
From an opportunity perspective, are you talking about from a revenue perspective or the thrill, or what is it? You know,
whatever is your perspective.
I think the opportunities happen on both sides. B2C has the thrill of the fact that there is scale in the country. You reach out, and every new product or a new service you do, you're talking about millions. But there is definitely a challenge of the revenue structure around it, and how do you kind of monetize it. The belief is that the monetization, the digitization in some of these platforms, whether Aadhaar or the entire digital stack, will help getting a lot of services to the last mile, and there will be monetization of the same. It's something which is work in progress. We're seeing today lending. There was a flavor of payments. Today is a flavor of lending. Tomorrow maybe insurance. Some of these things will keep playing out, but B2C has that challenge of monetization. B2B on the other side is slightly long haul. It's not exciting, but definitely the revenue pools exist. So this is a current context situation. In the current context situation, B2B from a revenue perspective seems to be much more exciting than B2C. But in the long run, over a 10, 15-year period, once you have the trust of the customer, once you're already in, scaling businesses and consumer is going to be challenging or different. The other way to look at this is B2B will allow far more players. B2C at some point in time will consolidate more and more, because as a customer, you can only have that much of mind space or phone space, as you call it today. So I think B2B has again opportunities more from multiple players being able to serve. Consumer will kind of get consolidated. So that's how I kind of do between the two. From an employee perspective, both are again exciting. Again, depends upon what you really want to do. Consumer gives you a new high, but B2B is something which is solutioning, where you're personally meeting somebody. In consumer, you don't get to finally meet the customer. So those are some of the things that I can talk about.
Yeah, absolutely. I think one of the things also I feel will play out is that in the B2B space, there are multiple niches which are currently underserved by the incumbent BFSI institutions. I think fintechs will definitely want to solve for those and dominate those sectors for sure as starters, and then maybe make a bigger play. So yeah.
Yeah, absolutely.
That's useful.
Yep. Yeah, Rajan, yours has been an interesting profile. You are a technologist at heart, a chief innovation officer at BBPS. Uh, I just wanted to pick your brains on what RBI has launched, which is called the CBDC, Central Bank Issued Digital Currency. Uh, we understand that, again, it's a currency. It's not really a method of paying, but given some of the features of CBDC, such as associated anonymity that RBI has mentioned that it will have. One of the things that payment companies do is when they process payments, they also get access to customer data. Now, with CBDC coming in, that aspect of acquiring customer data will probably go away because it is supposed to be anonymous. So you think with CBDC being launched, will it disrupt the play of fintechs in the payment space?
Yes, actually, that is what I think it will do, because one of the key features of CBDC is something called programmable money. So let's say, like, you want to make a recurring payment for every month for a particular amount, right? You can't do that in cash, right? Nobody can actually come and take the money from you on a regular basis. But you can actually program a CBDC account to actually, process a transaction on the recurring basis. That is one of the features of CBDC. Other thing is, one of the concerns which people have, whether CBDC is going to be anonymous. So it has been designed to be anonymous up to a certain extent. So that anonymity is up to definitely is there. And besides that, one of the key features of CBDC is, it's actually supposed to be looking like it's on a blockchain. So it's a digital currency, but at a basic layer, only with the transaction between the banks and the central government is on blockchain. And after that, there's a layer so for real-time processing, CBDC is not on a blockchain. So that's why, it happens in a very fast manner, because typically on a blockchain, you have a concept, something like a gas, right? For the processing, it might take quite some time. So that is a layer which they have put it aside, and the ground level transaction of the CBDC happens on a regular UPI-like network. So I feel like, CBDC is something like very well built for the future, and it's going to go for quite some time. Yeah.
Okay, so is that an opportunity for the fintechs, or that's set to fintechs payments?
The immediate opportunity for the fintech is, many banks are want to integrate with CBDC. So only a couple of banks like HDFC and ICICI Bank have integrated. So there are almost like 1,500 more banks to integrate. So there is a huge space actually for fintechs to operate over there. And as of now, there is no PG, payment gateway, for CBDC. So I know some players who are already developing it. That is another sector for the fintechs to go ahead actually.
So I'll just do a plug-in here. If some bank wants CBDC, we're happy to provide the technology.
There they go.
We are not allowed to make sales pitches here. But great, thank you so much. Also, I wanted to pick your brains on the platform that the government of India has launched called the ONDC.
Yes.
A lot of these e-commerce players feel that it is a direct competition to their business model, and that they are already serving the customers well. So why is there a need for such a platform? Is ONDC again a disruptor for the e-commerce business and for the fintechs as such?
Yes, actually ONDC was designed to be a disruptor for the fintech. So what the government observed, the e-commerce market was being dominated by from some top players, monopolistic players like Amazon Pay and Flipkart. And from the seller perspective, let's say they first register the products on Amazon, they have to again go and register the product on Flipkart. And they have to do it twice actually. And both of them were somebody was getting 25% commission. And on the buyer side, let's say you want to search for Amazon's website, you don't get the good deal over there, then you go on Flipkart website, and you go on a lot of websites. So now ONDC has been introduced in between. It runs on something called a backend platform. It actually disconnects the buyer and the seller. So, and what really happens, like, when you put in a search, right, it goes to the ONDC platform, and from there they actually put, in a democratic way, they put all sellers on the same ground. So Amazon, Flipkart, and the local Kirana stores, they all will be treated at the same level, and it will be shown to the customer. Now the customer has got the choice to, like, buy something from Amazon, right, and get the delivery for some, let's say, from some other player, and they take instance from somebody else. So I feel like ONDC will again cause a disruption in the e-commerce market.
Yeah, possible. Thank you. Ashutosh, let me come back to you. And this is my initial assessment of how fintechs are, being that they're still young, they're still evolving. There is a bit of heightened regulatory scrutiny that is being applied on the conduct of fintech, especially on the lending side, given certain incidents that have happened. And RBI and the other regulators as well have voiced concerns around automated decision models for lending, etc., which could have inherent biases. So from a B2B fintech space, you think navigating regulatory environment is a challenge, or what could be other challenges that you guys face on a day-to-day basis?
I think fundamental question to ask is regulation an impediment? And our firm view on that is no. I think it's important to be regulated because then it brings in consistency. If you are lending out money and if credit is the sole criteria, right, to evaluate, consistency is required in terms of how credit decisionings are happening. So regulation is very, very positive. Now, in terms of, see, large part of regulatory capital comes in from banks. No matter what fintechs do, at the end of it, it is banking capital coming in. We are merely conduits which ensure the banking capital goes to the right borrower. Now, if we are playing the role of conduits, whatever we do needs to be in the ambit of current regulations. Now, and which is why all the regulatory initiatives which are supporting underwriting, KYC, the means with which lending can happen is very, very positive. In fact, India is far ahead in terms of how the regulator is providing great initiatives so that fintechs can add value to these lenders and the lenders can deploy capital. You compare India to any other developing or developed economy in terms of regulatory initiatives which have happened in the last 5-10 years, India will be far ahead. Credible as a fintech has just started expanding outside India. A core difference that we notice, right, when we look at other markets and you look at Singapore, you look at Indonesia, Philippines, you look at Middle East as market, right? Now, what RBI has done or what regulators have done with account aggregator, with GST, with so much of data which is available, with KYC completely getting digitized, these are initiatives which are not there in a lot of other countries. Now, I don't think these are impediments. So regulations are not challenged. Regulations are welcomed. They bring in consistency in which we can deploy capital and financial institutions need to deploy capital. So regulations are welcomed.
No, well said, Ashutosh. Totally buy that point. I think regulatory guidelines give you the boundaries conditions, and if you're able to work within those, I think there is no challenge at all. In fact, it's an opportunity.
I'll just add one more point onto that, right? Now, our regulator is such that they're not biased. If a view is taken, the view is forever, right? Look at what happened with the FLDG guidelines. They got changed, right? RBI is quite liberal with regards to taking feedback also from fintech and banking fraternity. If there is a regulation which is coming, but it is anti-business or business can do better if there are changes, they actually end up doing these changes and they do it very, very fast. Gone are the days when regulator was taking forever to do these changes. So just yesterday on something which they had rolled out a couple of quarters ago, they did allow some leniency with regards to how lending can happen through the digital lending guidelines. And these changes are really welcoming for the fintech fraternity.
Yep. I think what the regulator has definitely been progressive, and you're right in terms of the way they take feedback from the market, they incorporate, and they evolve as they go along. It's an iterative process for them as well. But yeah, having said that, quick question to Abhishek, Arun. You have again, as part of fintechs, been part of, and fintech started out as partners for the incumbent BFSIs. Now, given that there's been certain change in the way RBI has been looking at fintechs, in some of the fintechs increasingly are looking to obtain authorization from regulators. So, you think this is a strategic shift from for fintechs, where they used to just partner with incumbent BFSI institutions, but now are increasingly looking to enter that space themselves by getting licensed?
So I think it's a evolution. It's a question of it's a nuanced situation. The nuanced situation is that at a point of time, fintech was a young industry, so it's becoming an adult. So when you are younger, you do try and do multiple things as at a particular scale. Uh, when the scale was not there, it did not make sense for the regulator to kind of come in and stop the innovation. So that once that innovation happened, a certain scale happened. Now regulations are welcome. So that's one part of the answer. We also need to look at it in the context of its money. India is a low trust situation. You can't have a situation where people start losing money. The third element to this is that so it's a call between distribution and manufacturing, and I'm not talking from a commercial perspective. Is distribution, if I was a fintech and if I had a lot of customers, is distribution leading to much more revenue and much more engagement with my customer? Or if I become a manufacturer, will it lead to better customer journey? The one part about the regulatory angle, where I'll have to probably invest in more regulatory infrastructure and so on and so forth, that's fine. But at the end of the day, at a business commercial level, you will see that, are you able to serve your customer better? Is the customer experience better? And commercially, will you make more sense? So I think it's a good opportunity for fintechs to become come in the regulatory space. And that's the entire journey. Even in banking, there were payment banks, small finance, and full-fledged banks. So I think this is an entire continuum which will get created. It'll be good if the regulator does allow some kind of situation. For example, if you are a PAPG or if you are a PPI, then the lower order license comes to you automatically, versus for everything it becomes a license and a process. I think the regulator is working on that, and there are SROs similar to what IBA has on the payment side, which is being proposed. Some of those elements will help this to move faster. So my personal view is that it's not a bad thing, but it's also context of where you as an organization are. It's not a one size fit all.
Yep. So Arun, follow-up question to that. Given that it's evident that fintechs are getting increasingly licensed and entering voluntarily the regulated space. So how do you think this will play out? Are they going to be competing directly with the incumbent PFSIs, or they're going to select niches to dominate on, or the collaboration continues?
No, I think very interesting question. I think we all welcome this regulatory thing. It is actually right time to actually get regulated, have the compliance in place and everything. I think the partnerships with the banks or financial institutions will continue. I think my sense is that because I've seen both the sides, from the banking side also and the fintech side also, banks traditionally has been, if you look at banks normally used to open an account. They used to manage your funds like deposits. They used to lend money. They used to have insurance, and they used to give you wealth services. So all these 4 or 5 microservices they used to give. And what has fintechs done? I think they have taken all these elements as a separate entity and worked on, whether it is a payment company, so phone pays and ATMs, and they were there wherever there was gaps. So these fintechs actually came into the picture and they started flourishing. Similarly, if you look at the lending majorly banks were into the larger what you call corporate lending, or maybe mid-market lending, but the smaller ones were still there, which was unpenetrated. So there you look at the companies like Bharat Pay, where they are funding based on whatever the collection they and the ticket size is less than 20,000, 40,000. So these are the things. And there was always a space where the fintechs actually played. Look at the wealth tech. There are companies like Zerodha, which are making tons of customers. So I think this partnership will continue, and the custodian will always remain the bank. That's my personal view, that because ultimately the money is getting settled, and fintechs are only helping or giving better solutions to the customers. And if I see the journey, what I've seen, now banks are also very open as far as partnering with fintech, whether it is a bigger bank or a smaller bank. For all these services, they want to partner with you. Now they don't see you as a competition. They see you as a partner in the group. Because ultimately, at the end, the money is getting settled there, and they want to, I think, lend to the bigger ones, and the market is still open. And I'm sure these sort of opportunities will continue in the future also. So my sense is this partnership will keep on growing in the future also.
Yeah, makes sense. So Arun talked about banks or the incumbent BFSI sector concentrating on customers where they could monetize better, and therefore there were certain segments which remained untouched, underbanked or unbanked. Now my question to Rajan is that you think fintechs will be able to drive the agenda of government of financial inclusion, and the flip side is that the segment that requires financial inclusion is a segment which is difficult to monetize because of the ability to pay is not really there.
Right.
So what do you think will be the way forward? Will the fintechs really drive the financial inclusion agenda for the country?
Right, right. So financial inclusion is a topic which is very close to my heart actually. And as a part of a country which has 140 crore population, we do have like 40 crore bank accounts, but still like, you know, around 35% of our country's population is still underbanked, right? And in the financial terms, they are called as like, you know, no file customers or new to credit customers. So there are many banks who would like to lend them in the farm sector and other sector, but the challenge which they are facing is like they do not have any data of this particular customers. So one of the alternatives, like, you know, which is possible is like something called alternative credit score, which can be created based on which the banks can lend. We ourselves are actually working on similar, like, you know, alternate credit score, but there are fintechs also who could do something similar based on the data which they have. Like, for example, let's say I have a lot of respect for companies like Swiggy and Zomato, who have created their own micro entrepreneurship platform actually. Like, you know, they have created jobs in India. Similarly, like, you know, they also have a lot of leverage of their data. So let's say they have like 1 lakh people driving around. They have data of this 1 lakh customers, 1 lakh delivery boys. They can actually create the credit report based on the performance of this person, and they can expose that data to fintechs, and the fintechs can probably create a lending book on based on top of that. So I would like fintechs to encourage micro entrepreneurship in our country and create jobs for the, like, you know, for the population. That's what.
No, absolutely. I think
Yeah.
that's what I started off as well, saying that data of individual gets generated at multiple points in time, and they can be harnessed well.
Right.
Of course, the challenge is harnessing big data is also not that simple. But
Right.
yeah, as technology evolves, I think we'll get there. So we're almost out of time. I think the discussion was fairly interesting in terms of we touched a lot of aspects. Happy to take questions. I think we have just 2 minutes left. If there are any questions, we're happy to answer them.
We're getting a question. Yes, sir. Your name and your company.
Yeah. Good evening. My name is Ashok Agarwal. I worked around more than 2 decades in the banking. Then moved to consulting. And the today's topic is the future of fintech. I agree with Astos, regulatory supporting and some kind of the digital governance should be put in place. Fully agree. From today now, where you see the fintech after 5 years from today now? Ask those, please.
And in fact, interestingly, this is something we were discussing just outside, right? And some part of this actually Arun did mention, right? There are various aspects into banking, and fintechs are picking up one problem each and trying to dedicatedly solve that. There will be a time at some point in time, banks will only be capital providers. Liquidity is where it is with banks, right? Fintechs won't have liquidity. We will not be the ones who will be lending everything out, right? But at some point in time, entire capital will sit with banks. And to crudely say this in Hindi, they will manage khata, किससे पैसे लेने हैं, किसको पैसे देने हैं. The entire activity of managing how to lend, who to lend, how to underwrite, how to open the account, how to do the KYC, how to manage the loan book, how to track EWS, etc., will all be done by fintechs. So fintechs will build all the road rails. The banks will just be driving through the road rails built by fintech and managing capital. So we will try and reduce the role of banks to just being capital providers.
That's true. Okay, the fintech will do the uh, lower cost of transactions for any operation of the retail banking.
No, sir. What he
Whether
means
you-
is, let me rephrase. What he's saying is that banks or the incumbents will become the back office. Fintechs will be the front
so
office.
that way, you will drive the banking. Okay, now to take a scenario where banking as a services.
Correct.
Now then another concept, banking as a services. So where you see, are you, fintech will provide banking as a service concept, or which is as good as just like a virtual banking?
So actually, see, banking as service, I think across the panel, if you look at fintechs, there are more than 2 fintechs who are already doing banking as service. Now, fundamentally, one concept is providing and building SaaS, which banks could use and take it to their customers, corporates, SMEs, retail. Another way to look at this is, can we truly create platforms which are beyond banking? Now, banking was limited to activity of managing money, savings, as well as loans, right? Can we integrate services which are composite together for individuals which are way beyond banking? Now, you look at platforms, if an SME is there who wants to apply for loan, they apply for loan. But can they use the same platform to do international trade, to find customers, to book logistics, to book cargo insurance, etc.? Can we provide platforms which are beyond banking, right? And this is where fintechs will take banking too. So don't look at just the aspect of managing money related to banking. At some point in time, you will have several platforms which will be beyond banking platform, which will
in
help
brief,
you ease do
aggregator
business.
of
So
various services.
I might have to cut in. No more further cross questioning. One last question from this. I'm so sorry. I have to be a little strict on that. Can we get the mic passed on? So final question, please. Your name and which company and whom would you like
This
to
is
address?
Pradeep Agarwal from MindGate. My question, I would like to congratulate NPCI for 9.5 billion transactions, 14.89 lakhs crores transactions. Huge success for the UPI digital payment. My question is to Mr. NPCI panelist. I would like to know whether there will be any UPI charges in the near future and whether it will see as a hindrance to the growth of the UPI in India.
Okay. First of all, thanks for the question, and I really appreciate seeing somebody from MindGate. You are one of the big technology providers of our NPCI, so thanks for that. But the question which you asked, I actually officially cannot comment on that. I've been specifically asked to not take an official statement on behalf of NPCI.
Can we have Mr. Dilip Apse's comment on this?
You know, so what you're trying to get is a news bite. That's not going to happen today, unfortunately. But on that note, you know, we're really short of time, and I have to personally thank each and every one of our panelists. Let's give them once again a big round of applause. And can I have the honor of calling upon Khushbu Soni to help us with the felicitation, of course, the founder and chief editor of CIO News. Let's give her a warm round of applause as we welcome back the lady. And of course, if you could have Khushbu and Rohan to help us in felicitating all our key speakers and panelists. So ladies and gentlemen, this is all happening today, and we hope you'll are having a great time at our summit. Of course, a very warm round of applause for all our eminent speakers today who have joined us. Of course, thank you so much, Ashutosh. Thank you, Rajan, for joining us in the frame right now. And I believe the applause can only get bigger and better if you learn from them. That's the least we can do to appreciate their knowledge. So we, of course, had Abhishek, Arun as well, who've joined us. And how can we not thank Rohan? Ladies and gentlemen, let's give him a warm round of applause. Thank you, Rohan. for accommodating this conversation in your schedule. And we'd request all of you to come towards the center, of course, with Miss Soni. If we could all have you together in the frame. And with that, the conversation which was brewed, I hope you all got an opportunity to network with them and, of course, understand them and their perspective better. And of course, remember, the hashtag is very simple. It's right on the stage, CIO News Summit 2023. Let's keep hashtagging that and creating great content around this. Thank you once again. So with that, we may request you to be seated as it is now time for another great discussion. We're talking about understanding the importance of building a personal online brand. We're talking about somebody who's been a former management consultant at Big Four companies like KPMG and PwC. Our next speaker has worked with banks and NBFCs and has helped them make a ton of money, but currently working as a full-time content creator turned entrepreneur. He's now helping the common man make a ton of money. I'm sure that transition has been great and rather very fulfilling. With over 3 million followers on all the social media platforms, and I'm sure it's going to keep continuing and the millions are going to keep getting added. He's also ventured into finance training, wherein he conducts masterclasses on personal finance topics for his audience. He also writes and acts on TV advertisements, most notably being the Tyke ad, which you must have seen, which was aired on Shark Tank India, and the Stock Grow, which was aired during IPL. He's bagged renowned awards like the Finance Influencer of the Year. We're talking about Forbes India Top 100 Digital Stars and the Cultural Brand Ambassador of India by the Ministry OD Culture Government of India. Well, he's an active angel investor in fintech and edtech, and of course, with his current venture being 1% Club, I hope we all can be in that 1%. Well, on that note, it is my honor to call upon none other than, ladies and gentlemen, Finance with Sharan Hegre, in Skin right now. Thank you, Sharan, for honoring us with your presence today. And on that note, how could we miss out the lady who's curated and conducted this entire show? The very dynamic and magnanimous personality herself, the founder and chief editor of CIO News, Khushbu Soni. So Khushbu, let the questions begin.
Thank you so much, Bhavna. You've been very, very helpful today. Sharan, thank you so much for making us, feel good today, because I think your presence is important right now, because today we know that digital presence is very, very important, and you've reached that level, right? You've embarked that journey. We would love to hear from you. Thank you for coming today and agreeing to do this dialogue with me.
It's my pleasure. Thank you for having me here.
Awesome. Sharan, I wanted to put across my first question by asking you, what has inspired you? What made you become Finance with Sharan?
Right. Actually, it was a very the real answer has nothing to do with doing what I'm doing today. I was applying for my MBA about 3 years back, and I was one of those people who have not really achieved anything from in the extracurricular section of my resume. And these US MBA colleges want people who have done something extraordinary apart from academics. So academics was easy, right? Study and get good marks. But how do you stand out in the extracurriculars? I was not good at sport. Tried doing some social service work, but everybody does that. So towards that extent, that is the reason why I thought, okay, if I create some content on finance and get like 1,000, 2,000 subscribers, something I can write in my extracurricular. So that is the reason I started. But fast forward to today, I would not have imagined it to be, this big.
Wow, that's such a dream, right? Excellent. So when you started your journey, when you started posting content, did you? I mean, you mentioned that did you not anticipate to become this big? So how has the journey been so far? What kind of efforts you had to put in to achieve something like this?
Right. So, content creation is one of those fields where there is no rule book, right? There is no textbook that you can follow and follow the rules. If it was so easy, then like everybody would have done it, right? It's more about understanding the psyche of the audience, and that keeps changing every month, month on month. Understanding what is something that entertains the audience, what triggers the audience, and not just on one platform, across 4 different social media platforms, that is Instagram, YouTube, LinkedIn, and Twitter. On every platform, that same audience wants different things, right? So understanding that, and then positioning your content for that particular platform is the challenge. So it just comes to trial and error, and it's not as simple as just blindly copying someone else's strategy, right? You need to create a unique strategy for yourself, and that only happens when you're doing a lot of experimentation. Let's say you build a certain audience, let's say you get 1,000 followers. Now you need to meticulously understand who those 1,000 followers are, how are they reacting to the content that you're making, and keep changing the content accordingly, in a manner that appeals to your existing audience, but also gets you new audience of that particular category. Right? So that is something that comes purely through experimentation. There is no rule book that you can follow. Of course, you can take inspiration from other content creators in this niche. But when I began, nobody was doing anything in the education space, at least on Instagram. So it was a challenge to understand how do you take complicated finance topics and convert it into a manner which is digestible for everybody to understand, because I wanted to reach to the masses. Finance news is already available on reputed publications and traditional media, but that was only for the top 1% of India who could read it and understand it. But what about the rest of India? So I wanted to make it accessible to everybody. So the way that I could do it was to add humor into finance and also do a little bit of acting and sketches, and that appealed to the masses. And that's why millions of people today watch my content for something as boring as finance.
Know, right? I mean, this industry is such that today, I mean, if I had to think that, okay, numbers is going to be difficult for me to, work on. During my college days, during my schooling time, I used to always think, oh, maths, oh, accounts, right? So I used to always think that. And then making it innovative, making it for the audience. It's like you said, it is very, very important to know your audience, to know what kind of thought process they have, how much. I mean, today on Instagram, I think after Instagram, people are not able to spend more than 3 seconds or 4 seconds or 3 minutes. Yeah, the attention span has gone down. So capturing that attention for just that minutes is very important. But if you ask me, this is important right now. Coming on digital, making your own personal brand is important. Be it 1,000 followers, be it 500 followers, or be it 3 million followers, it is very important. So what advice would you give to all our dignitaries that have come here? They have immense knowledge and expertise, right? If they have to if anybody here wishes to share that knowledge, how could they start their journey? What is that they should look at as a best practice, or as a start point to build their digital presence? And make a viewership where their experience can be heard, that their experience can be learned.
Right. So first, I'll like to touch upon why it's important to build a personal brand, because today most of us might think that I already have a strong network of people. I'm already doing good in my career. So why should I spend my time on social media and try to build a personal brand for myself? I don't want to. I'm not really interested in the number of followers that I have. That is how I used to think before I started content creation. But today, after seeing the number of advantages that I've had in my life, it's almost feels like I'm cheating, right? It feels like I'm playing the game of life for me is too easy because everything is coming easily. Everybody is reaching out to me. So reaching that level is what personal brand does for you. More than the knowledge that you have, it is more important for people to know that you have that knowledge, right? Today, you might feel like you are the most intelligent person in their respective field, but the people will not think that unless you're discovered, unless people know that someone like you exists who has all of this knowledge. And the only way to do that is to create content. Now, the number one mistake that most people make when they make content, especially the people who are very, very intelligent in their field, is they make it really, really jargon heavy because they feel like when I make it jargon heavy and when I may be very, very technical, that is when I might seem smart to the audience. But the audience doesn't really care about your difficult terminologies that you're using. If you can explain what you know to a 15-year-old, like when I make content on finance, I will actually show it to my friends and family who have no knowledge in finance. And if they are able to understand it, only then I know that this video is ready to go out. And you might think that if somebody is not able to understand the way I'm telling it, is that really worth my time? Is this person who is not understanding this complicated jargons, is he worth my time? But this person is going to be your future customer, right? Because today you have a good list of customers, but the future customers are the ones who are in their 20s and 30s, right? The Gen Z crowd. So if you are not able to connect with them today, you will lose out on them to future companies who will crack that game before you. So cracking the content creation game and the personal branding game is super crucial for the longevity of your own business.
Great piece of advice. Can you share some memorable, success stories or lessons that you've learned in your own investment experiences?
Right. Success stories for me is firstly explaining to people that investing is not just about making the most amount of money. Most people confuse investing with thinking, putting in the stock market and getting 20%, 25% returns. I think the bigger learning for most people is that the way that you have allocated your money, your existing money, is wrong. And you cannot just blindly copy somebody else when you're investing, right? So many people do that, right? We ask our friends what stocks you're investing and they just blindly copy it. But everybody will have their own unique investment plan that they need to follow when it comes to investing. So the way I say it is that your finances are cluttered right now. How do you unclutter it? And as a consequence of doing that, you'll actually block the leakages which are happening in your investments. So I think making people understand that which is what I do through my master classes, right? So around 10,000 people come for this masterclass every month, and we collect feedback from almost all of them. Right? We have a very strong customer experience team talking to all of them. And once we hear their feedback, I think that is when I really feel happy about what I'm doing. That when people say, yeah, I'm a CA, but I did not know about this. Now I'm planning my investments better. I've been working for 10 years. I graduated from IIT, and now I know exactly what to do with my money. So these are maybe seemingly small success stories, but this is what truly matters to me. It's not that I made 50% growth last year. I mean, that is just one-off growth. But what people really need is how to unclutter your finances and plan it better.
Fantastic. My one last question before we end today's conversation. Any tips that you would want to share, where it's more about balance risk and get more return when it comes to making investment decisions?
Well, I think it's very difficult to give a tip which for the masses, right? If you're asking me for one particular person, and if that person tells me I need money for this and that, then I can give that tip. But when I'm talking to a crowd of, let's say, 50, 70 people, it is actually incorrect to give a tip because there is no financial advice which is applicable for everybody. For some person, it could be a 70% allocation in stock market, 20% in debt, 10% in gold. But for someone on that side of the room, it could be 70% debt, 20% equity, and 5% gold and 5% real estate. So it's very, very customized for every person. So I think that is the tip that I would like to say, that don't blindly follow any advice that you're getting. you need to figure it out by yourself. There are only two ways to do it. Either get a financial advisor. Unfortunately, there are only 1,300 financial advisors in India for a population of 1.5 billion people. The other one is to learn it by yourself. So I would say the greatest tip is to learn how to manage your finances by yourself, because copying others is just not going to work out for you.
Absolutely. Great. Great conversation with you, Sharan. Thank you for sharing your journey for being a content creator. I know personally a lot of people that, who wants to get into that, journey. And we all are trying to, take an effort to at least understand how we can share our experience, curate relevant content for our audience, because it is important now. It is important to have your own digital presence. So good to have learned from you on your journey. Thank you so much for coming us on
Thank you.
on this platform of CIO News and talking to us today.
Thank you so much for having me here.
I would love to hear if there are any questions for Sharan, and if anybody would like to ask any questions.
I don't think there are any questions, but what we can do is, of course, since he has such a great social media following, we're going to continue with that following. But Sharan, we want to create an epic moment with you if time allows. Can I request both of you to please step in the center and check? Check. And if I may request, I've been engaging with you from the very start, but I've not made you stand yet. And I thought that since we're going towards the final leg of the day, could I request all of you to please stand together so that we can have one moment of selfie with Sharan, of course, with all our leadership in the background. Can we have you step in the center? And all if you can do, apart from the clapping, you can just, that'll be a better thing. Can we have like a V? V is like victory for everyone, 1%. Yeah? All right, everyone make some noise. One on my camera as well. Okay? Are you guys ready? Hands up in the air, everyone. All right? 1 second. 3, 2, 1. And everyone, make some noise. Khushbu, that's why I did it, because I can get you to hoot with this one. All right. And on this front, if I could have Ms. Soni, if you could help us in felicitating. Ladies and gentlemen, let's give him a warm, warm round of applause. He's been so incredible with not just his content, but of course, so much ahead. We wish you all the best, Sharan, on that. And finally, we get that wonderful smile from him. Thank you, Sharan, on joining us on that. And of course, thank you, Ms. Soni, for helping us in curating this session with none other than Sharan Hegde. Thank you once again. So ladies and gentlemen, we're just going to be heading towards the final leg. We're talking about the Thought Leadership Report soft launch, which is going to be happening. We're talking about the cover launch, which will happen. But before that, we have a voice note from someone who's of an immense value. We're talking about an officer on special duty to the Chief Minister of Maharashtra, whose expertise lies in the technology sector, and his aim is to use his knowledge acquired over 2 decades of betterment of the state. He's somebody who started with setting up small enterprise which specialized in tech gadgets and set up a software firm which developed programs for Indian and European entities. Having done well for himself, he started assisting the government, and in 2014, he was appointed by the government of Sikkim as the ex officio secretary, and in 2016, he was appointed as an advisor by the Chief Minister of Arunachal Pradesh. Ladies and gentlemen, we're talking about OSD CM of Maharashtra, Anand Maria, who's joining us with the voice. Can we have him on the screen with the backdrop?
Good evening, namaste.
Yes.
Let me start off by thanking CIO for having graciously invited me today. And let me also apologize to all of you for not being able to physically come there. Certain work pressures need me to travel. The BFSI sector have played a crucial role in driving economic growth and digital transformation. Bharat's exponential growth in the BFSI can be attributed to various factors, including technological advancements, regulatory reforms, and the visionary leadership of the Honorable Prime Minister Shri Narendra Modi. It is through his reforms and initiatives such as the Digital India campaign and the push for financial inclusion through initiatives like the Jan Dhan Yojana that have played a crucial role in transforming the BFSI landscape. These initiatives have promoted digitalization, financial literacy, and access to the financial services for millions of individuals across the country. By fostering favorable business environment and embracing innovation and technologies, we are positioned as global players in BFSI industry. Through the combined efforts of the government of Maharashtra and Honorable Chief Minister Shri Eknath Shinde, the state has also become a vibrant hub for BFSI and fintech innovations. We can leverage the vast consumer base, the increasing internet penetration, and the growth of the middle class. These factors not only provide opportunities for business, but have also contributed to the overall economic growth and financial inclusion in Maharashtra. I once again congratulate CIO on this occasion and wish all the very best to all of you. Thank you very much.
Thank you so much, ladies and gentlemen. Can we once again have a warm round of applause? We would have loved him to be present in person, but I believe a man of such importance, even sending a great congratulation message means a lot. Well, now it is time for the Thought Leadership Report cover soft launch. Well, to continue our conversation forward, of course, the brilliance of the team of CIO News is again under radar. And what I mean by that is they've decided to launch a report which will have insights into future trends for industry, be it banking, financial institutes, NBFCs, and HFCs. The report aims to capture their tech trend, digital transformation, cybersecurity, CX, and cloud. On that note, it is time for me, of course, to re-invite Khushbu Soni to join us. And along with Khushbu, if we could have the honor of having the partner and the national leader, financial services risk advisory at Grant Thornton Bharat LLP, Vivek Iyer. Let's give both of them a warm round of applause. And just to make it a little more interactive, just to make it a little more interactive, you can see this visible difference in the bass and the voice. All right. So since it's the time for the report launch, a report cover launch, let's just get a short countdown and before we retire into a wonderful evening together. So when I just say 5, you can say 4, and then we can begin. All right, everyone, 5, 3, 1. And it is time for presenting the CIO News BFSI and FinTech Thought Leadership Report cover launch at the count of 3, 2, 1. Everyone, make some noise! And with that, congratulations to the team of CIO News. May I request both of you to please step in the center. Let's just get a lovely photo with Ms. Soni and, of course, Mr. Iyer in place. Yes, of course, please. Mr. Iyer, with your brilliance in play, we'd love to hear from you.
This is one of our biggest initiative. We've been working on this very hard to create something for our community. We've built this as a media and also a community for our viewers and our audience. CIO News is working day in, day out to create relevant content for our viewers. We also want to create a report which can help you get insights on the industry's current challenges and what are the way forward. We are going to do it a little slightly different than you see the traditional reports. We're going to try to make it more visually appealing. You will really see the transitioning of old India to new India. If you look at the cover, it shows we've have people from the tier 2, tier 3's representation done on the report. They're using AR, VR, right? And like also, like Akshay mentioned in his panel when he went to Manali last time, and the way, the transaction was done by a small time vendor, that shows our new India, right? And that is what we intend to show. We intend to show you the transitioning of old India to new India, the transformed India through our thought leadership report. BFSI industry and fintech industry has been working tirelessly in this transition to make it more personalized experience for customers, creating a secured environment for customers. And we do forums like these where they can collaborate and interact and learn from each other on their experiences. And on this report, I am getting a great support from Grant Thornton for today's summit, as well as for our thought leadership report. Grant Thornton has agreed to work with us in building this report. And thank you so much, Vivek, and the entire team of Grant Thornton to agree to do this with us, and your faith in CIO News to bring something out for the industry. Vivek, your expectation, from CIO News for the report, and what's your thought while we build this?
So thank you so much for that. That's one of the advantages of just having a great team, because you get to take unnecessary credit for what you didn't do. So thanks, guys. Thank you so much. But from an expectation standpoint, to me, one of the things from a financial services standpoint that has always mattered to me is the whole democratization of financial services, which technically in terms of is a very nice word to use. I was taught that you should use complex words, confuse people. You're far more effective. But what I seriously mean is that, providing banking to everyone. And from a report standpoint, in terms of the three pillars broadly that I've always kind of seen: innovation, regulation, technology. And these are three key themes that we also see from a road ahead standpoint in a digital era. So, interestingly, I'll give a good example. A bad example is me buying a cigarette. A good example is me buying an apple. Okay, so let's go with the apple example. Go buy an apple. I use a QR code, in terms of, and we're able to kind of send money there effectively. That to me is a great innovation. Now, if I can do this going to Bangladesh, if I can do this going to Sri Lanka, I can do this going to New York, London, the same thing. That's basically in terms of taking it global. We're talking about, I'm not talking about just taking it to Bharat, the hinterland. It's there, we are there, and we are going to, in terms of the digital penetration and the infrastructure is going to be there. But in terms of not just being local, but also going global from a trend standpoint. And those are some of the expectations in terms of personally how I see in terms of the report contributing. I'll not bore you with things like, in terms of the details of it, primarily is because I may not be aware with so many details, the team is. But from a metaverse standpoint, in terms of the whole digital character and the personality that you would have, all that my access to digital avatars were bit strips that were created in Facebook about 10 years back. I was very excited. My wife hated it. And so metaverse in general, we really need to see more in terms of how that kind of integrates. But that's the beauty of the report. The report will not just talk about these things, but it will also talk about certain impossible things. There will be challenges, but the report, as rightly said, it's not going to be the regular report. And the beautiful thing that we actually do at Grant Thornton consistently is challenge ourselves. We have been continuing to do that, and we will do that. And that's something that, I expect from the report. So, my team's already not liking the commitments I'm making on behalf of them, but I'll just stop now. I have a tendency to ramble on.
I
But
think,
yes.
we have, I would say, Ms. Soni, we've got lucky that we've got Mr. Iyer actually present here today. And on that note, if I may request both of you to please step in the center along with the report at the background, if we can just get that moment in place, if we could have the team cover it. Ladies and gentlemen, hashtag CIO News Summit 2023. This is the cover launch, and of course, a lot is expected beyond this. So thank you once again to Ms. Soni and Mr. Iyer for joining us, and congratulations on this wonderful cover book, the cover launch today. Thank you once again.
Thank you so much. Thank you to everyone who's taken out time and joined us today on this event. Your time is really appreciated. We will be doing this pretty often. We've been doing this pretty often. Your feedback is valuable. Please do share with us how can we do better, how can we bring relevant content to you, how can we create platforms, events like these, summits like these, which are more relevant to you. And we'll try to reach there as much as we can. Thank you so much once again for joining us today.
Thank you so much. And as we have these leaders on stage, let me tell you, there's a lot which goes behind the event. So you're talking about the men and women in black. Can we have a big round of applause to the official CIO News team? Do remember to thank them on the way out because they've put in so much of efforts. I think the applause has to be much more louder. They've put in so much effort. So to the men and women in black, a salute to all of you and kudos to the team. So thank you everyone for joining us. It's time for a chilled beer and wine, and let's network and transition into a beautiful Mumbai evening. This is me, Bhavna Bhatia, signing off for today. Thank you for being such a wonderful audience. Thank you.